Do you remember waking up to the news on the 22nd of June?
Digital currencies are back in the red today as investors keep a close eye on the conflict between Israel and Iran.
Likely focused on the fact that the US launched airstrikes on Iranian nuclear facilities that day, you might have missed what happened to Bitcoin. The crypto market hit rock bottom on June the 22nd, with the losses in many altcoins exceeding 30%. The total value of the cryptocurrency market fell from an estimated 3.4 trillion to 3 trillion during this period, reaching its lowest drop ever.
Bitcoin was trading below that key $99,000 threshold today, its lowest level in over a month after President Trump confirmed that U.S. bombers struck 3 of Iran's nuclear sites.
Now, large conflicts like this often cause panic in financial markets. They push crypto investors to safer assets like bonds or gold in the process. Still, Bitcoin is sometimes seen as a safe haven because it's not tied to any one country or region, making it less exposed to geopolitical risks. So today, we're going to explore 9 harrowing risk scenarios that could dramatically affect Bitcoin's price, from regional wars and financial meltdowns to blackouts, bans, and pandemics. We'll rank each by impact and likelihood. And at the end, you'll see a summary table with our estimates. Just remember that the following shouldn't be taken as investment advice. Let's start small. Conflicts like Syria or Yemen are human tragedies, of course, but financially, they barely register. Bitcoin sees little effect. Regional demand might spike, but globally the price stays stable. Studies show that a 1% increase in war-related media attention correlates to just a 0.2% drop in Bitcoin trading volume. In the long term, geopolitical conflicts increase the likelihood of higher inflation rates worldwide, and this should benefit Bitcoin. So if another localized war breaks out, the short-term impact is mild to neutral. The price impact would be a minor drop or no change. The infrastructure impact would be weak or localized, and the long-term outlook would be neutral or probably slightly positive.
The partner of this video is Bybit. Earn up to $30,000 in rewards plus 10% off fees by signing up for Bybit. Bybit welcomes new users with a powerful bonus package. Start with a $50 sign-up bonus and unlock rewards as you deposit and trade. You can earn up to $30,000 in deposit-based bonuses and receive exclusive VIP upgrades. All new users receive a 10% discount on trading fees. Learn more through the link in our description. Now, let's get back to the video.
Now scale it up. Russia attacks the Baltics. NATO responds. Europe erupts. Oil hits $300, capital control rolls in, banks freeze transfers, and Bitcoin drops fast. But why? First, media frenzy. Based on earlier patterns, a 50% rise in war-related media coverage could reduce global BTC trading volume by around 10%, and we're sure that the media impact could exceed that. Second, governments tighten the screws here. Emergency laws, wallet restrictions, exchange blackouts, you name it. Binance, Coinbase, Kraken, withdrawals frozen by request. In a geopolitical crisis, no one escapes to high volatility assets. Panic ensues. Investors flee to cash, gold, even canned food. Bitcoin looks like a luxury here. And remember that Bitcoin recovered after Russia's invasion of Ukraine in 2022, but this wasn't NATO versus Russia or China versus Taiwan. So, full-scale war, price impact, down 40 to 50% or more. The infrastructure impact would be medium, with possible regional fragmentation. The long-term outlook, bearish, years to recover. Now, April and May 2025 have seen a dramatic escalations in tensions between India and Pakistan, triggered by a terrorist attack in Kashmir and followed by Indian airstrikes across the line of control. While the situation hasn't turned into a full-scale war, the conflict was causing uncertainty across regional and global markets, including crypto. 1 week after, Bitcoin touched $97,000 and gold surged. The US dollar strengthened, investors pulled out of risky assets, and crypto markets dipped. But the story didn't end with red candles. In Pakistan, the threat of economic collapse, currency devaluation, and sanctions actually pushed people toward stablecoins. In India, where crypto markets are semi-regulated, local exchanges have seen surges in withdrawals. Search trends also show more people looking up how to store Bitcoin offline. But what happens if the unimaginable happens? What if nuclear weapons are used? Military analysts estimate the likelihood of limited nuclear engagement in the India-Pakistan conflict to be low. It's around 2.5%, right? And this is under current conditions. However, if one side crosses a red line, such as a full-scale invasion or a loss of strategic territory, that probability could rise rapidly. In such a scenario, Bitcoin would likely crash, not because of the technology itself, but due to the sheer shock and panic across all financial markets. 2 billion people two nuclear powers. If these countries clash, seriously, especially with nukes, the crypto infrastructure in the region just completely collapses. Asia accounts for 30% of global BTC volume. Internet blackouts, satellite outages, data centers destroyed. I mean, liquidity would just dry up. Bitcoin crashes 40% plus. So, conclusion. Long-term impacts, 10 to 15% rise and then a 40% drop. Infrastructure impact, none or high with the nuclear version. Entire regions could just go offline. The long-term outlook, slightly positive, or again, if we see dramatic changes, bearish. Bitcoin adoption, liquidity in Asia falls significantly, and this would hurt global markets, but maybe temporarily. Now, a Chinese invasion of Taiwan could be the most destabilizing event of this decade. The world now watches military movements and diplomatic standoffs already. Cross-strait tensions are at a boiling point. Simulated blockades, aerial shows of force, and a tech-driven global economy built on the semiconductors Taiwan produces, this is all hanging in the balance. If China invades, Bitcoin's price would likely crash fast. Investors would panic. They'd flee these risk assets and move into dollars or gold. Based on past conflicts, we can suggest that Bitcoin should drop 30 to 60% in the short term. Why? Not because Taiwan is a crypto hub, it's not, but because Taiwan is at the heart of a global semiconductor production. Taiwan accounts for more than 60% of this global industry, and a war could cripple supply chains, it could shake global markets and spark recession fears. Stock markets would fall and Bitcoin would follow. If the United States or its allies engage militarily, the risk of escalation in global conflict terms grows exponentially. A carrier group in the Taiwan Strait, ballistic missile exchanges, cyber warfare on financial infrastructure. In this scenario, capital flight accelerates and Bitcoin might struggle to find solid ground. But if the conflict is limited, say, to a fast Chinese blockade or a negotiated surrender, Bitcoin may begin to rebound after the initial drop. If the war doesn't escalate globally, Bitcoin may stabilize as people turn to it for more capital protection, right? Especially in places facing sanctions or capital controls. And while China banned crypto in 2021, signs of a policy shift have emerged. In 2024, Beijing opened a blockchain research hub and began taxing crypto gains. If a war disrupts China's economy, demand for decentralized assets might surge even behind the Great Firewall. Infrastructure risks, pretty medium. Taiwan isn't central to crypto, but panic and regulation in nearby markets could cause turbulence. Long term, surprisingly bullish. If the dollar is weaponized again, or if trust in fiat weakens, Bitcoin could rise in a neutral global store of value. So let's put some numbers to it. Probability of full invasion in the next 2 years, around 10 to 20%, according to analysts tracking PLA readiness and political indicators. Short-term price drop upon invasion, 30 to 60% within days. Medium-term recovery time frame, well, 6 to 12 months, contingent on escalation. Long-term outlook on the price, bullish, especially if trust in fiat systems erodes or capital controls become widespread. Medium-term outlook depends on escalation. Long-term, Bitcoin may gain trust as an asset beyond borders and politics. So let's sum up the key insights from the first 4 scenarios. Bitcoin is not a war hedge. In times of total instability, it suffers like any other asset, especially when we're talking infrastructure breaks or, say, failure of coordination. Now, if this kind of analysis is your thing, make sure to hit the like button and click subscribe. This is all to stay updated, right? Okay, so how could a global financial crisis start? US banks are heavily exposed to long-term bonds. When interest rates rise quickly, those holdings lose value fast. That's exactly what happened actually with Silicon Valley Bank in 2023. As rates climbed, depositors rushed to withdraw funds and this just triggered a collapse. Now imagine this happening to several major US banks all at once. Panic spreads. Bond markets plunge as banks scramble to cover losses. The S&P 500 drops maybe 10 to 20%. In the early stages of any financial crisis, even Bitcoin takes a hit. Traders sell, institutions de-risk, liquidity disappears. We saw it in March of 2020. Bitcoin dropped nearly 50%. But by 2023, something had changed. As regional banks collapsed, Bitcoin rallied. It started acting like a kind of digital gold. People wanted a safe place for money, but one that couldn't be frozen. Yes, volatility remained, but so did growing trust. So let's sum it up. Price impact, probably a 20% drop with a potential 30 to 40% rebound. The infra impact would be low or even positive as the situation boosts self-custody solutions. The long-term outlook, moderately bullish. Okay, imagine this, a powerful solar flare like the Carrington event of 1859, or a high-altitude nuclear detonation triggering an EMP, or let's say a massive cyber attack that disables power grids across the US, Europe and China. It sounds like science fiction, right? But just recently, large-scale blackouts hit Spain and Portugal at the same time. These scenarios aren't, well, impossible, they're just rare. Now imagine no internet, no power, no servers, Bitcoin wallets and exchanges go dark, nodes vanish, the blockchain loses sync. And with most of the network offline, Bitcoin's price would collapse fast. We're talking a 50 to 80% drop in price. Even if miners could keep running locally without synchronization, the network fractures. Forks appear, right? Duplicate chains form, it's chaos. Yes, there are fallback systems like Blockstream Satellite or Localized, but they only cover a fraction of users. The system sleeps. If the outage lasts just a few weeks, the network could recover slowly. Regions reconnect, right? Blocks resync. But if the disruption stretches into months or longer, the infrastructure breaks down. Local versions of Bitcoin might emerge. The chain might need a full restart even. Technically possible, but socially devastating. It just wouldn't be the same asset. So in the case of the tech collapse, we'd see a negative price impact of 50 to 80%, an infrastructure impact that would be severe, widespread failure or network dormancy. Long-term, only partial recovery. BTC may survive as a niche or historical system, right? Okay, in 2021, China banned crypto mining, and Bitcoin dropped 8% almost immediately. Overnight, I think it was. But what if that wasn't just one country? Picture this. A new US president takes office and declares Bitcoin a national security risk. The EU follows with sweeping regulations. IMF encourages developing nations to do the same. One by one, the world's biggest economies coordinate a crackdown on crypto. We're talking 40% tax rates, mandatory KYC, bans on self-custody wallets. Exchanges are ordered to freeze accounts. Institutions like BlackRock and Fidelity are forced to liquidate. Legal gateways would dry up too. Banks refuse to interact with exchanges. 70 to 80% of fiat on-ramps just vanish. Liquidity tanks. Headlines scream, Bitcoin criminalized. Wallets banned. Retail investors panic. They sell, or worse, they disappear entirely. So the market crashes not once, but in waves. Initial forced selling from institutions would cause a 15 to 25% drop. Liquidity collapse from banking exits, 10 to 20% more. Retail panic, another 10 to 15%. Usability crisis after wallet restrictions, another 5 to 10%. Total drop, probably 40 to 70%. Now, some might see this as the end, but others could see it as a rebirth. Historically, crackdowns have fueled decentralization. When China banned mining, the network rebalanced. When Argentina banned Forex, P2P exploded. Bitcoin could be pushed back into grey and black markets, or it could rise as a symbol of financial freedom. With this scenario, we'll see the following. A negative price impact of 40 to 70%. The infrastructure picture shrinks dramatically, legal access vanishes. The long-term outlook either suppressed into the underground or reborn stronger. Who knows? Enjoying this breakdown? Tap subscribe and give this video a like. There's much more like this on the way. What if a pandemic happens again? A virus thaws from melting permafrost, or a bat-borne pathogen mutates and jumps to humans, or maybe, like some, suspect with COVID, there's another lab leak. Whatever the source, a new pandemic sweeps the globe. Governments impose lockdowns, offices go remote, stores go online, physical cash fades, and digital money thrives. In a soft pandemic scenario where the virus is less deadly and governments flood markets with stimulus, Bitcoin benefits. Liquidity is cheap. Central banks print money. People look for assets that can't be devalued. Bitcoin could climb 20 to 30%. That's what we saw after the COVID shock. In March of 2020, Bitcoin plunged below $5,000, but by April of 2021, it had soared past $60,000. But if the virus hits harder, if it disrupts supply chains, triggers food shortages, and causes mass unemployment, then Bitcoin stumbles. In times of extreme uncertainty, investors flee to the US dollar and cash. Risk-off mode kicks in. BTC drops 20 to 40% short term. Whether it rebounds depends on how long the crisis lasts and also how well the world would adapt. So, global pandemic 2.0. Price drop of 20 to 40% followed by a potential 40% plus rebound. Infrastructure impact, low to moderate. Online activity and adoption rise in the process. The long-term outlook is positive. Bitcoin would be seen as resilient and adaptable. Inflation is already visible everywhere, in groceries, rents, and daily life. But what if it goes exponential? Governments overspend, tax revenue can't keep up, central banks crank up the printing processes, trust in fiat evaporates, people lose confidence not just in price stability, but in the currency itself. Now, this has already happened. Take Argentina, repeated devaluations, capital controls, and skyrocketing black market exchange rates. Venezuela, wages wiped out by inflation, Bitcoin used for remittances and savings. Turkey, sustained inflation over 50%, loss of trust in the lira. Iran, international sanctions, collapse of the rial and dollarization of the underground economy. Russia in the 90s, ruble devaluation, hyperinflation, barter economy in many regions. When this happens, people look for ways to escape. In many cases, they've turned to Bitcoin. In hyperinflationary economies, peer-to-peer BTC usage has jumped 50 to 300%. Even if 1% of national capital flows into Bitcoin, the global effect can be massive. Let's take something like, I don't know, Turkey as an example. GDP of around $900 billion. Just 0.5% of that redirected into BTC is about $4.5 billion. That's roughly 2 to 3% of total daily crypto volume. It's enough to move markets. And in this scenario, Bitcoin isn't like a risky bet of sorts, it's a digital lifeboat. And here's the summary of scenarios that could crash or boost Bitcoin. Regional war, mild impact, mostly stable. NATO scale war, sharp drop of 40%, long recovery. India-Pakistan war, 10 to 15% rise with a harsh inversion of 40%. China-Taiwan war, we'd see a drop of 30 to 60% within days. Financial crisis, initial fall, then strong bounce. Tech collapse poses a systemic threat, BTC breaks without the internet. Global ban, massive sell-off, probably looking at a drop of 70%. Either death or defiance awaits. Pandemic, short-term panic, long-term gain. Hyperinflation, Bitcoin becomes a digital refuge. Positive scenario there. Of course, there are many other possible disaster scenarios. For example, we didn't tell you about the scenario of hacking the Bitcoin blockchain using an incredibly powerful super quantum computer. But this isn't a full-length documentary. I mean, we could go on for hours. So share your ideas in the comments. And please don't treat this as a scientific forecast, right? I'm just a guy in a room. We based it on research, but the prediction, it's a tricky game. We're looking forward to hearing what you think. What is Bitcoin's biggest risk? War, regulation, tech collapse? Drop your thoughts in the comments. And don't forget to subscribe for real analysis, not hype. My name is Bradley Peak. You've been watching the Cointelegraph YouTube channel, and I guess I'll see you next time.